Are trade deals good for mortgage rates? Mortgage rates have been on quite a roller coaster. And since April, we've seen major interest rate fluctuations due to the announcement of one of the things being these Godzilla tariffs. If you don't know what Godzilla tariffs are, these are referring to a 25% import tariff imposed on automobile parts and engines, basically mainly sourced from Canada and Mexico. This has had significant impact on Ford, their trucks, a lot of their engines, their Godzilla engines, which is why it's called Godzilla tariffs. These V8 engines are manufactured in Ontario, Canada. So there's been a quite immediate impact. I mean, we had rates really looking like they were doing some good things back in March, and we had a little bit of a reprieve. Some consumer sentiment was, hey, things are getting better. But immediately in April, there was these impacts from the tariffs. Bond yields initially dropped due to investors having massive uncertainty surrounding these tariffs, and traders sought these safe havens like U.S. Treasury bonds. And this was good for mortgage rates. This was like when there's uncertainty, certain levels of uncertainty, then that's, money typically goes into the more safer havens, and mortgage-backed securities, bonds are that safe haven. And money really is going into three places. It's either in your cash, in your bank, it's in equities, or in bonds. And so typically what happens is mortgages, if the stock market's not doing great, then the mortgage markets are doing pretty good because money tends to come out of stocks and into bonds, or out of bonds and into stocks, things like that. However, yields for these bonds, they surged unexpectedly. This was due to a lot of inflation fears because, tariffs are inflationary. And the reason why they're inflationary because tariffs increase or they could increase consumer prices. And this is going to force the Federal Reserve to keep interest rates high. So this rapid shift, the White House, when they were doing these tariffs, I know there's a lot of gamemanship going on with the tariffs. I mean, the whole idea is, and like him or not, that Trump is a businessman. So he's like feinting certain things like these massive tariffs with the whole goal of trying to get the other countries to drop their tariffs. So if we end up, hey, you don't have any tariffs on us, we're not going to have any tariffs on you, no tariffs. Everything's hunky-dory, and that's actually good for interest rates. But here's where it gets interesting. Now we're talking about all of these trade deals that are happening. Now, trade deals equals market stabilization. Rates recently have steadied a bit, and this is because of the discussion of all these trade deals. Deals are good. Deals are good because as the mortgage markets are concerned, uncertainty is the main culprit, and it's been the main culprit for rate volatility and higher rates. While deals at least puts all the cards on the table and, face up, and we know what we're dealing with, and it makes the markets a little bit more comfortable or gives it stability, I guess is the best way to say it. If successful, trade agreements may have influenced the Fed to prioritize economic growth and potentially affecting mortgage rates. The idea being is that the Fed may shift its focus towards supporting expansion rather than controlling interest rates or controlling inflation, which is what controls interest rates. This could lead to mortgage rates coming down, making borrowing, obviously, mortgage rates and mortgages more affordable, and which would then push into housing, which is pretty cool. I was watching on CNBC and Ryan Serhant was a guest on Power Lunch, and he made a very interesting comment. He said that you can't really have everything. I'm summarizing. He said you can't really have everything, right? You're going to have either you get low rates, low home prices, and then you're going to probably have a hit to your stock portfolio. It's not like you can have everything. And no matter what market you're in, there is some sort of opportunity. And right now, we are living in a time where all of this uncertainty has led to mortgage rates going up, inventory going up. It's really, in my opinion, providing the perfect storm for buyers right now to get out. He gave an analogy. He said, it's like buying a convertible. Go out and buy the convertible when it's raining. Don't buy it when it's sunny out because you're going to pay more. Right now, rates are high. Everybody's sitting on the sideline. So you buy now when everybody else is kind of just waiting and seeing. Makes sense. This is where the mortgage markets are kind of in a wait and see. Personally, I feel like there's still a lot of room for mortgage rates to come down. they are high, but it's been a very interesting time as home buyers are just kind of like putting up with it. It's become the new norm. And is this just where everybody's going to just hang out? Okay, 6.5. That's pretty good, I guess. And that's going to become the new norm. And then when the rates drop under 6%, you get a conventional loan rate that drops another 0.5%. You're going to see an absolute massive craze and run for home buyers to jump into the market, dust off that pre-approval letter, and get into the housing game. It's going to be crazy. And when that happens, you're the one sitting in your kitchen, sipping your coffee, thanking the good Lord that you already bought and don't have to be playing with the rest of those in this madness once rates drop. And by the way, if any of this stuff is just kind of confusing, or if you want to ask further questions, please don't hesitate to give me a call. You can certainly schedule a time with me as well. Make a comment, and I do reply to those. All right, thanks, and have a great day.